Welcome to 2025. This is the ultimate breakdown of my trading strategy. I'm keeping it simple and focused. No fluff, just a step-by-step process of how I spot high probability trade setups and execute with confidence. If you've been looking for a proven approach that balances precision and risk management, this is it. Let's get straight into it. So if you look over at the charts here, I only trade the S&P 500 futures, so that's ES1, and NASDAQ 100 futures, which is NQ1. So first things first, we want to wait for New York session open at 2:30 before we place any trades. But how do we know what trades to take? Well, I trade liquidity sweeps. So what we would do is go into the high time frames, the 1 hour or the 4 hour, and we look for our highs and lows. So here we have a high. Here we have another high. These are our draws on liquidity at the moment. We also have this low here as another draw on liquidity. This 1 hour imbalance as another draw. And then another draw here. Now, we want to wait for 2:30 UK time for market open. Let's make it nice and visible for everybody. Yeah, that's nice and visible. We all know when market is going to open now at this orange line. We want to wait for a sweep of either side of liquidity. I don't care which side gets swept. Once we see that sweep, we can start looking for our entries. So there we have it. Market session opened. We see a high get taken out. We see this 1 hour high get swept by the market. Now, what I do is once we sweep out high time frame liquidity, I always wait for a 5-minute retrace. So let's see if price gives us that. You see legs down, a nice reaction off that liquidity sweep. And there we have it. We had a 5-minute retrace. It just a bullish candle close on the 5-minute after the initial move down from the liquidity sweep. Now that we've got a 5-minute retrace, we can jump down into the 1-minute time frame and start looking for our entries. What I want to see is a 1-minute break of structure and 1-minute fair value gap being respected. So this is the most recent low. I need price to push down here with a candle close for a break of structure. Price, this here is not a valid break of structure because we only get a wick below the most recent low. We need a full candle close like this one here. That is a valid break of structure. Now we see price pull back into this 1-minute fair value gap. If price ends up respecting it, I will take shorts all the way down to these H1 lows, the other side of liquidity. Because what does the market chase? Liquidity. We see a nice reaction off of that fair value gap. We enter short on the candle close, stops above this fair value gap as a breaker. I don't expect price to push past this point. With a TP at these lows. You could target even further, potentially the 50% mark of this fair value gap, or even these lows all the way down here. I'm a scalp trader. I like to be quick in and out trades. I don't want to be holding overnight or for days. That's just not how I trade. So, we'll place our order. And we'll watch what price does. A lot of trading is just controlling your emotions and being patient for the right setup. There we have it. That is TP1. We sweeped out these loads. I would be taking probably about 75% of my position, leaving the rest with stops at break even to target the 50% mark and these lows down here. Let's see if price gets there. Price ends up taking us out at break even, which is why I like to take 75% of my position at the closest draw on liquidity, just in case we have a reversal. And that's also why I like to go break even, just to protect my capital. I hope this video helps you understand my strategy and how I execute trades on a bunch of different time frames using high time frame liquidity and low time frame for entry.